Dear students, I have come with a new module, QUASI contracts. And I'm happy to tell that this is the last module from Indian Contract Act 1872. Next module will be next chapter, Sale of Goods Act. Now, what is the meaning of QUASI contract? QUASI contract already I have explained with the types of contracts. So it's also known as constructive contracts or law of restitution. It resembles like a contract, but there is no actual contract. We know that if you want to make a valid contract, there are 10 essential elements. So here, this quasi contracts will resemble like a contract. Say, for example, the obligation of the person who found something lost, the finder of the lost goods. That is or your account is credited, a wrong credit is made to your account. So, quasi contract. See, these are the examples for quasi contract. We will be explaining in detail. So it resembles like a contract. But when an amount is credited to your bank account, there is no contract. Somebody has by mistake, not intentionally, they have done that. While online transfer, it happened. So that it resembles like a contract. Mode of creation of quasi contract is not like regular contracts. It's based on doctrine of unjust enforcement. Finder of lost goods, it doesn't belong to us. So it should go to the actual owner. So that is the theme or the contract or the obligation we are following in the case of quasi contracts. Now, what is the legal effect? Section 73 of the Indian Contract Act 1872 says a suit for damages can be filed in case of quasi contracts. I am going to explain with one case decision also this point. As in the case of a completed contract, see when this legal remedy is applicable. In the case of finder of lost goods, if he is not able to trace the actual owner, see he has that item, imagine a diamond piece got a lost item, a person got the diamond piece set. So what he will do if it's from when he was doing shopping, so what he will do if he's not able to trace the owner there, he will give it to the shop owner. So imagine the shop owner is also not able to find the true owner. Then what happens? It has to go to the finder of the lost good, whoever got that item, that he has the right, because he has an obligation only against the actual owner, nobody else. Any mediator in between, they are helping to trying to trace the true owner, cannot take that item. So this is the legal effect. If somebody will do that, they can sue for damage. Finder of the lost good can sue for damages. Similarly, in the case of wrong credit, in the case of bank accounts also. Now, conditions to be fulfilled for quasi contracts. It is not like an ordinary contract. So what are the conditions to be fulfilled if we have to consider a contract as quasi contract? So principle of unjust enrichment requires 3 conditions. This is unjust enrichment. That doesn't belong to us, item or the amount doesn't belong to us. It belongs to somebody else. We have no right to take somebody's things or somebody's money. So what are the 3 conditions? First is the defendant is enriched by the benefit. Somebody else is getting the benefit by intentionally or unintentionally. So enrichment is at the expense of the plaintiff. So the plaintiff, see, when I was transferring money to somebody, a shopkeeper, previously I have shared money, I transferred money to the Ola driver. So by mistake, this whatever the amount I transferred to the shopkeeper, it's going to the Ola driver. Ola driver is getting the benefit. Then third point is retention of the enrichment is unjust. If the Ola driver is not ready to credit back the amount what I have unintentionally transferred to his account. So that is, these are the 3 conditions. So defendant is enriched by the benefit, enrichment is at the expense of the plaintiff, and retention of the enrichment is unjust. Now, types of quasi contracts, there are 5 points we will learn in detail. First one is supply of necessities for necessary supply to a person incapable of entering into a contract. A minor, he has only legal guardian, parents are not alive. So that legal guardian will be supplying the necessaries. Second is reimbursement of a person paying money due by another in payment of which he is interested. So payment, in the case of the payment, I am going to explain in detail. Third is obligation to pay for gratuitous act. Somebody which have done, there is no intention to pay voluntarily. When my house is on fire or a vehicle is met with an accident, we will call the police, we will call the fire people, anything. They will come on the spot because they will not try to enter into an agreement at that time. What they will do, they will try to resolve that issue, but the bill will come, it's your duty to make the payment. Responsibility of finder of lost goods. If you get somebody's things, maybe it's a pet animal, maybe it's a diamond jewelry or any gold or any valuable documents. Fifth is liability of a person to whom money is paid or thing delivered by mistake or coercion. So this, when an item is delivered, imagine you're booking something in Denso. You're getting an item. You have not ordered for that. Wrong delivery the Denso agent has done. So these are the QUASI contracts. You have no right to keep that item. It's your duty to return that. So we will explain these points one by one. So first point is supply of necessaries. For necessary supply to a person incapable of entering into contract. Who is incapable of entering into contract? Minors, lunatics, idiots, all this, bankrupts. We have seen that. So section 68 of the Contract Act, Indian Contract Act 1872 is giving the details about necessaries supplied. Necessaries supplied meaning you have to remember that in the case of a minor, if a legal guardian is supplying, whatever the basic thing, they cannot expect anything expensive. So here, when he will become a major, their personal estates are liable to repay. Not the minor who has got the benefit, his personal estate will be liable to repay that to the legal guardian. So that is an important point. Their personal estate is only liable, not the minor as a person is not liable to repay. And another point you have to remember, only for the necessaries. They cannot ask for any luxuries. So here, no personal liability for a minor. An article supplied should be necessaries. That is very important. In the case of Nash versus Inman, 1908 it happened. A minor, he got the legal guardian supplied 11 waistcoats. So when a minor going to school or college, 11 waistcoats are not required. Only one. Court was of the opinion that it was more than what is expected as necessaries. So, but you have to remember that necessaries vary according to the situation in life. If he is going to a reputed school, their necessaries will be different. If he is going to a medium school or based on the situation they have, the necessaries will vary from situation to situation. That also will be considered by the court in deciding the verdict. Next, reimbursement of a person paying money due by another in payment of which he is interested. Section 69 of the Indian Contract Act 1872 is giving this details about this reimbursement of a person paying money due by another in payment of which he is interested. So subtenant is paying rent arrears on behalf of the tenant to protect the property. This is that example. Imagine a subtenant is taking a tenancy right from a tenant. So the actual agreement is between the tenant and the landlord, but the tenant is not paying to the landlord. So rent arrears is there and subtenant is asked to vacate the office or the building. So here what he will do, subtenant want to continue. So he will clear the rent which is due to the landlord on behalf of tenant. So this is one example. So but that is one example because subtenant, why in the situation he is doing, he has to protect his interest. He want to continue to do the business in his building. He doesn't want to vacate that building. That is the interest. But if imagine two neighbors, husband and wife are fighting. The neighbor is paying rent for that because to end the fight, I don't want to get disturbed with my neighbor. That will not come in this clause because the reason is that relationship between husband and wife or the landlord, that your neighbor is different. You are not a party to the contract. In the first case, you have to remember there is subtenant is a party to the contract. There is a valid agreement between tenant and subtenant. In the second case, you are just paying rent because your neighbors are fighting with the landlord. They are not able to pay. So here you are a neighbor. They are a neighbor. You are not a party to the contract. Now, third is obligation to pay for gratuitous act. That is something which you are doing and you know that you can collect that money. There is every valid reason to collect that. Section 70 of the Indian Contract Act 1872 is giving the reason for collecting money like this. The thing is done lawfully and in good faith. So intention is to get paid for. The other person has enjoyed the benefit. So I will explain these points. That is, imagine your car met with an accident or a vehicle met with an accident. Your house is on theft, any natural calamity. You can call the police, you can call the fire force, anything. So they will come immediately because the intention is not to enter into contract. They will help you to solve the situation. But here you have to remember that whatever the services you have got, from the police or the fire personnel or the traffic police, you have every duty to pay for that. So that is, in time of need, in time of an emergency, they are coming into picture. They are lawfully obliged to collect the amount. Fourth is responsibility of finder of lost goods. This we have to learn in detail. Section 71 of the Indian Contract Act 1872 is giving the responsibility of finder of lost goods. You got somebody's pet animal or valuables or valid documents or valid any valuable jewelry or anything like that. So what are the rules? So what are the rules for selling that item? See, three rules are there. Some rules are there for selling that item. Imagine you are not able to find the true owner. So at one point you have to take a decision whether you want to sell that item and to keep that money. So when you can take the decision regarding selling that item, if goods are of perishable nature, fruits, vegetables, etc., the owner cannot be traced. All your legitimate efforts, you are not able to trace the owner. Then owner refuses to pay the lawful charges of the finder. When you are finding that the true owner has to give the lawful charges incurred by the finder of the lost goods. In this case, the owner is not ready to make the payment. Then lawful charges of the finder in respect of the goods found is 2/3 of the value of the thing found. So 2/3, it cannot exceed 2/3 of the value. So at least 1/3 you will be able to save it for the seller. So 2/3 expenses of that item, the finder of the lost item is entitled to send. Now in this case, Hollins versus Fowler. See one example. Hollins picked up the diamond jewelry from Flower's shop. So what he did was, he was not able to find the true owner. So he gave the diamond jewelry to Flower to trace the owner. So the Flower couldn't find the owner. So he want to retain that. It's diamond jewelry. So he filed a case, Hollins filed a case. He got the jewelry and he gave it to the owner because he's the shop owner. Somebody will lost the item, will come in search of that item. So here you have to remember, they filed a case. So here court asked to return the diamond jewelry to Hollins because if only the real owner can claim the goods from the finder. If he's not able to find the real owner, then the finder of the lost good has got the capacity or he got the right to keep the item. Now the last point, liability of a person to whom money is paid or thing delivered by mistake or coercion. This already I have mentioned, that is amount credited to your account, or you are paying money, online transfer. Now it's very common. By mistake, you are paying to your wrong account. So if money or an item is delivered wrongly to a person by mistake, Denso or delivery boy is delivering the food by mistake to a person. Somebody else has ordered that. So the person must return the item or the money. That is the rule. So this is applicable for money or items collected by coercion. Coercion is by using force. You have no right to collect somebody's item by force. Example, forced to pay tip for delivering the item. If the Denso boy is demanding tip for delivering that item, the person who paid at that moment, he got every right to collect that. Now, jointly own money to one person. Imagine A and B jointly own money to C. Without consulting B, A made the payment and B also made the payment. So C is twice benefited. One thing you have to remember, he has to return the excess money. C has to return the excess money collected. Now both of them paid by mistake and excess money to be paid back. So this is what I wanted to explain as QUASI contract. Though we have mentioned the types of contracts, this is the detailed explanation. And with this, we are ending the Indian Contract Act. Thank you.